Welcome, everyone. We're here today to talk about something huge happening, kind of quietly behind the scenes, a massive shift in global finance. And our conversation today, it really builds on the latest analysis from Jim Rickards. He's laid out what he calls a secret central bank plan. And it's not just, tweaking interest rates. No, this is about a fundamental move away from the US dollar back towards real assets, gold, silver. We want to unpack why this is happening now.
Exactly. And this isn't just theory, it's a visible strategy. You can see it unfolding if you look past the daily market noise. It's about physical gold. That's the language being spoken in the central bank vaults.
And look, if you want to understand these connections to really stay ahead of this monetary shift, you absolutely need to be informed. So make sure you subscribe to Axiela, turn on those notifications. It's how you get these insights, this context, before it becomes common knowledge. Okay, let's get into it. Rickards points to the weaponization of the US dollar as the main trigger. We know central banks were buying gold before, but what really lit the fire in 2022?
It was a breakdown of trust, a big one. Central banks, yeah, they'd been net buyers of gold since 2010. That was already a shift. But things went into overdrive after early 2022 with the conflict in Ukraine. The West hit Russia with this overwhelming wave of sanctions, over 200 from the U.S. alone, almost 20 packages from the EU. The goal was clear: crush the Russian economy.
Isolate them financially, the standard playbook. But Rickards says it didn't work.
It flat out failed. He's quite direct about it. All failed. Russia's economy actually held up surprisingly well, even better than the U.S. by some metrics. The ruble stabilized. Why? Because major players think China, India, Brazil, South Asia, they never signed on. Russia just pivoted its energy and commodity sales to them.
So the sanctions backfired. But the real game changer, the moment that shifted everything, was the move against Russia's reserves, right? Freezing that $300 billion in treasuries.
That was it. That was the watershed moment. U.S. Treasuries. For decades, they were the safe asset, the neutral ground. By freezing Russia's holdings, the U.S. and NATO basically told every other country holding dollars, China, Saudi Arabia, even allies, that their money wasn't truly safe. It could be seized instantly for political reasons.
The core assumption that dollar reserves were neutral territory just evaporated.
Completely shattered. The message was stark. If we could do it to Russia, we can do it to you if you step out of line. And that is what triggered this quiet rebellion. Central banks realized they needed something truly neutral, something unseizable, which means gold. That's why the buying accelerated so dramatically. They're buying safety from political risk.
Okay, that makes sense. And it leads us right to BRICS, Brazil, Russia, India, China, South Africa, plus the newer members. We keep hearing they're making a new currency to challenge the dollar. But Rickards argues that's not the main story.
Yeah, that's largely a misunderstanding, or at least not the immediate focus. Creating a global reserve currency. That takes, well, decades. You need deep trust, stable politics, massive liquid markets. BRICS isn't there yet. What they're building, and this is far more disruptive right now, is an alternative payment system. Think of it as a parallel financial network, outside Western control.
Right, so it's about the plumbing. Controlling how transactions happen, not necessarily creating a new water to flow through it.
Exactly. They're building their own rails, fiber optic cables, their own custodian banks, their own settlement and clearance systems, all designed to bypass anything the U.S. can block, like SWIFT. This lets them trade directly. Yuan for rubles, rupees for reais. No need to convert to dollars, no need to touch a Western bank.
Okay, but trade isn't always balanced, is it? If Russia sells, say, $10 billion in oil to China, but China only sells $7 billion in goods back, there's a $3 billion gap. How do they settle that difference?
And that is Rickards' key insight. This ties the BRICS plan directly back to gold. They don't need to invent a new reserve currency for settlement because
They already have one.
they already have one. Gold. Physical gold. Let's use that example. Russia gets yuan for oil. China gets rubles for goods. They net out the $7 billion they owe each other bilaterally. That remaining $3 billion imbalance. And that difference gets settled using gold. Not necessarily shipping bars back and forth constantly, mind you. It's done through accounts, through claims on vaulted gold changing hands. Ownership changes, but the gold might stay put.
So gold becomes the ultimate neutral ledger, the trust layer that can't be frozen or sanctioned.
Precisely. And because you're only settling the net difference, which is much smaller than the total trade volume, you don't need mountains of gold compared to the trillions flowing. But that fractional demand applied across massive global trade flows, it still creates this steady, relentless pressure on the physical gold market, pushing prices up.
Wow. Okay, connecting that $300 billion seizure to the BRICS, building this payment system, and then using gold for the final settlement, That reframes everything.
It really does. And getting this kind of deeper strategic picture, understanding how these pieces fit together, that's exactly the kind of analysis CRV delivers. If you're trying to navigate what's happening beneath the headlines, subscribing is really the way to get that crucial edge.
So this leads us right to the market. Central banks are in this full-scale race for real money, as Rickards puts it. What does this quiet gold accumulation actually mean for gold and silver prices right now?
Well, the key is why they're buying. It's not speculation. It's sovereignty. You
Mm.
see China, Poland, Turkey, Singapore, huge buyers, record tonnage. They aren't doing this hoping for a quick profit. They're buying gold because it's the only money that exists outside the political system. It can't be printed away. It can't be easily seized. It can't be erased by sanctions. In a world losing trust, gold is trust. And the market reflects this. As of, say, mid-October 2025, gold's been trading up near $4,120 an ounce. That's what, almost a 45% jump year over year? Pretty significant.
And silver's move has been even more pronounced, hasn't it?
Oh, absolutely. Silver's been hovering around $52 an ounce. That's a surge of over 60% just year to date. But here's what's really interesting. The gold to silver ratio. You know, how many ounces of silver by 1 ounce of gold?
Yeah, it tells you how they're valued relative to each other.
Right. It tightened quite a bit. It came down from maybe 85 to 1 to around 79 to 1.
What is that tightening signal? Why is that important?
It suggests silver is increasingly being seen not just as an industrial metal, but as a monetary metal again. People are buying it for the same reasons they're buying gold as a hard asset, as real money. It confirms this isn't just a gold story. It's a flight to tangible value. And Rickards is very clear on this point. These numbers, $4,120 gold, $52 silver, they aren't the peak. He sees this as just the beginning of a major historic repricing of real money, driven by this loss of faith in fiat currencies and sovereign debt.
Okay, so while the bedrock of the system is shifting towards gold, there's this other thing happening in parallel, the digital world, specifically stablecoins. What's the risk there, according to Rickards? It feels like two opposite trends.
It's a dangerous duality. He warns strongly about stablecoins, those digital tokens supposedly pegged one-to-one to the dollar. He sees two huge risks, and they aren't really about crypto volatility itself. First is, frankly, fraud and opacity. The whole sector is largely unregulated, right? Not transparent, not audited in any meaningful way. Now, most issuers are probably honest, but history teaches us, as Rickard says, one of these guys is a fraud, and we won't know who until it blows up. Think FTX, think Madoff. Lack of transparency hides problems until it's too late.
Right, so hidden risks. And the second danger, even if they aren't fraudulent.
It's liquidity, or rather, the lack of it in a crisis. What's the definition of any financial panic? Everybody wants their money back at the same time. Imagine confidence dips. Maybe one stablecoin issuer does turn out to be a fraud, or maybe there's just general fear. Suddenly, everyone holding any stablecoin rushes for the exit. They want their dollars back now.
It sounds exactly like a bank run, but potentially way faster because it's digital.
That's precisely the fear. A digital age bank run. Because what are these stablecoins actually backed by? Often, it's not just cash. It's commercial paper, maybe other less liquid assets, things they hold to try and earn some yield. When millions hit redeem simultaneously, the issuers won't have enough actual dollars on hand. They'll be forced to dump their collateral, whatever it is, into a falling market. That could ignite a fire sale, spreading panic through the wider financial system. And in that moment, when digital trust collapses, where does money flee? To the only things completely outside that system, physical gold and physical silver. Rickards calls gold the ultimate lifeboat.
That's a powerful image. Okay, let's try to synthesize this for everyone listening. What we're really seeing, based on this analysis, is a slow motion but deliberate pivot away from a global system based on trust in the US dollar and towards one where real physical gold provides the bedrock guarantee. Central banks aren't speculating, they're buying survival insurance.
Exactly. And that leads to the final, really provocative thought you should consider. If the world's central banks, the issuers of fiat currency, are themselves hedging against that system by buying massive amounts of gold for sovereignty, what does that tell you implicitly about their own confidence in the long-term stability and value of the very paper currencies they manage? That's the multi-trillion-dollar question underpinning everything right now.
Chew on that. And if you want ongoing analysis that helps you understand these deep currents and what they mean for you, make sure you subscribe to CRV Aricha. Stay informed, stay ahead. Thanks for joining us today.